If you have a mortgage renewal coming up in 2025, this is the most important video you'll watch because Trump tariffs affect everything and your mortgage renewal is no exception. So watch this video if you want to know how the Trump's new tariffs will affect your mortgage rates and what to do and how to be protected. So hello everyone, welcome back to my channel. I am Raghav Manchanda, the managing broker of 7 Lending. And in today's video, we're breaking down the effect of tariffs on your mortgage renewals. No fluff, just numbers and practical solutions. So let's get started. Okay, first let's talk about the big mortgage renewal crisis of 2025. There are over 1 million Canadians who are due for a mortgage renewal in 2025. Now, the reason why this is alarming is for majority of them, they got their mortgage or fixed into a mortgage around COVID time, which is let's say 2020 or 2021, where the mortgage rates were at their lowest. Majority of the people who locked in their mortgages that time were able to get a rate between 1.5 to 2%, which sounds like a great deal. But now in the current market in 2025, when they're up for renewal and they're looking for fixed rates, most current rates right now for banks are between 4 to 4.5%. And they're even higher if you have an alternate or a private lending solution. So what that means is your interest rate has almost doubled. Even if you have good income, because of the interest rate doubling, this will have massive effect on homeowners, especially where the cash flow is tight. Now, let's go into some specific numbers. Let's say you bought in a $500,000 property back in 2020. You were able to lock in at a 1.5% to 2% rate. Mortgage was fixed for 5 years. So now in 2025, your mortgage will renew at a rate of say 4.5%. Now, in 2020, your payments might have been about $2,100 a month. But when you renew the same mortgage in 2025 with the current rates of 4 to 4.5%, your payment will increase by $600 to $700 per month. What this means is even on a $500,000 property, you will have to shell out almost $8,000 extra per month because of the interest rate increase. Now, this problem also gets magnified if you're in BC or Ontario, where the average price of the property is $1 million or more. So that's almost doubling the effect on your pockets. Now, giving you a specific example, if you were a homeowner in Vancouver or somewhere in the GTA, let's say you bought a property in 2020 worth 1.2 million and your mortgage was approximately 1 million. And now if your mortgage is up for renewal in 2025, your payments will jump from $4,200 originally to $5,500 right now. That is over a $1,300 increase every month. If you look at annually, that's almost a $15,000 increase in your expenses. And we have to be real. With the tariffs coming in, a lot of general products and services are going to get more expensive. So are the taxes, municipality fees, so on and so forth. So this is a big deal as it affects our pockets right now. Moving aside from the higher costs most homeowners will have to pay, let's look into how the Trump tariffs are tangibly affecting our lives and the rate environment. So the number one thing which is obvious is the costs of basic goods and services will go more expensive because we are extremely dependent on the United States for a lot of our imports. So you can expect a lot of daily groceries, essentials, that can be more expensive by 25% or higher, however the manufacturers and the businesses decide to build that in. The number two is the Bank of Canada's reaction. Now, we do expect because of this, they will be fearing a recession and the interest rates should go down. And most banks are anticipating the rates going down by 0.75 to 1%. But the thing is, even if they are to go down, that is still a higher rate than the COVID rates. Now, we do have to be cautious with that. Even if you get let's say a 3 or 3.5% rate in 6 months, 12 months on your mortgage, that is still higher than the COVID rate. So it could affect cash flow. And the number three is the overall environment. Even though rate cuts are good, they are limited relief. The overall economy could be affected. So even if it's a low rate, it might not make that much profit for businesses, homeowners, or other stakeholders because the economy may be slower. Now, if you're facing a mortgage renewal in 2025, what can you do? Well, I have 4 options for you. Number one option is consider refinancing, and specifically what I want you to do is try increasing your amortization. Now, this may not be best for every situation, but hear me out. Now, on a $500,000 mortgage, if it is amortized over 20 years, your monthly payments are going to be around $3150 a month with a 4.5% rate. If we increase the amortization to 30 years, your monthly payments can go down to $2,500, which will save you about $650 a month. Now, there is a big caveat here. this does increase the length of the loan, and overall, in the end of 30 years, you might have paid more interest on your mortgage. But if cash flow is a concern, and this would affect your basic lifestyle costs like food, daily survival, car, etc., then it may make more sense to extend the term, increase the amortization, and have more money in your pockets. Number two thing you can do is consider selling or downsizing. Now, we have seen this in especially BC. A lot of people are leaving the Vancouver real estate market, selling their homes, and moving to Alberta, especially Calgary and Edmonton. You can only get a condo in BC for 500,000 or 600,000, but for the same amount of money, a lot of people are able to buy detached homes. And because they're selling homes, they have often built in equity. They are able to do that with smaller mortgage or even buying cash. So if that is on the table for you, maybe you're retired, maybe you're looking to live with less expenses, those could be good cash flow options to consider. Number three is, if you really want to ride the wave, I would say consider some 3-year fixed options. Really negotiate with your bank. And at the renewal time, make sure you talk to a mortgage broker like myself to know what rates are best for you, find the best deal. But I would also consider switching to a variable rate if that makes sense for you, so that it gives you 6 months to a year of more flexibility. And as we see how the tariffs pan out, how the market comes, you can see what rates you want to lock yourself in. The number 4 option to manage your debt better. Now, hear me out. The best way to deal with a cash flow problem is either increase your income or reduce your expenses. For most of us, increasing our income is not as simple and not possible. So the one thing we can do is decrease our expenses. So if that is possible by reducing how much you're spending on non-essential stuff, that would be a good idea, and put more money in savings. But the other thing you can do is actually restructuring or consolidating your debt to get cheaper payments on your credit card debt, your maybe unsecured line of credit, your car loans, sometimes which could be at a higher rate. A common way to do that is by refinancing your mortgage, getting a line of credit or a home equity loan. You can see, based on your specific situation, what's the best option. And if you want to book a call with our team to know if we can help you there, feel free to do that with the link in the description. But you know what? We've seen tough times like these before. Though there's a lot of things happening, I do believe Canadians have it in them to ride out the wave. And we need to find ways to make sure we can cash flow, and live the next 12 to 24 months with more savings, with using less debt, and making sure we are protecting ourselves. So I hope you found this video helpful. I know there's a lot going on, so if you have any questions or comments, feel free to put that in the comments below. Till then, make sure you like, comment, and subscribe, and I'll see you the next time.